Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look. I'm going to take a look at the New Zealand versus US dollars. We look toward the end of the trading week and into the new trading week, so let's get started. After a rotation down at the beginning of the trading week that saw the price move toward our low prices from not last week but the week before, the price started to move back to the upside in the New Zealand versus US dollar this week, first getting above the 100 bar moving average. That's a blue line in this chart. Then getting above the 200 bar moving average on the 4-hour chart. That's the green line in this chart. That momentum continued in trading here today, helped by the U.S. jobs report, which came out weaker, but then some price data out of the ISM manufacturing index, or the non-manufacturing index, I should say, came in much stronger than expected, and that took some of the steam out of the market, the dollar selling, and the price rotated to the downside. It wasn't until the price did move above the 200-day moving average, and we remember that moving average going forward also moved above the 50% retracement of the move down from the March high. That's this high right here, which, by the way, was a double top right through here to the low price that we saw in the month of April. So a target area areas were broken, the 50% 200-day moving average, but the price rotated to the downside, so there was a bit of a failure on that break. By the way, we also moved above this swing area going back to the month of February between the 0.6023 and 0.6037. So all these levels came in play, and that area is going to be remembered in trading next week. This area right through here has a level of resistance. As long as the price can remain below that level, the sellers are still in play. If we break above those levels, then look for further momentum with the 61.8% retracement, followed by the 100-day moving average as the next upside targets to get to and through for this currency pair to increase the bullish bias. Now, if the price were to conversely stay to the downside here, what would hurt what would give the sellers more confidence on the downside? And I'm going to put a horizontal line in right through here as well. But if you look at this area right through here, where we had a swing lower here, swing lower here, swing high, swing high, swing high, and then use that level as support through here, traded above and below through here, but then use that level as resistance in trading earlier this week. This area between the 0.5983 to 0.59905. I'll just put it in yellow here to outline the area more clearly for you. But this area right here would be the level that if we went below it, it would increase the bearish bias, and you can imagine that it would also going below this whole trend line right through here in the process. So getting below that level would increase the bearish bias, similarly to the way that getting above the 50% 200-day moving average would increase the bullish bias for the New Zealand versus US dollar. So that's what we have to look forward to in going forward and in trading next week. This is the projected or the range where we have the strongest resistance up here, strongest support down here, and if each of those levels are broken, I would expect further momentum in the directions of the break. So that's my technical look as we head into the close on Friday into the new trading week next week. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.